Hope everyone's doing well and had a good day. This is the Emini end of day review for Tuesday, July 23rd, 2024. We can see on the daily chart the market has been in a fairly tight bull channel, but after having 3 pushes up, we're starting to go more sideways to down. And you can argue the market is still in this channel, and this is a pullback. We're pulling back, maybe testing the trend line, maybe a 2-legged pullback. But all the way from maybe June 18th, the market looks like it's been in a trading range, tight trading range here. Bull breakout, bad follow through, another one, bad follow through, kind of 3 pushes up. And then even here, climactic behavior, tight trading range up here, overlapping bars, big up, big down. To me, this looks like a trading range. And then down here, strong enough bear breakout for a second leg down, and I think we will come back down and test the bottom of this buy climax, either the low of July 2nd or July 1st. But right now what we have here, strong enough breakout for a second leg, sellers above here, and there were, and now we have a low 1 signal bar from today's bar on the daily chart. Because we're in a trading range, there's probably buyers below the low 1. However, the buyers may not come in directly below the bar. They might buy a measured move below the bar, maybe below this swing low, maybe this breakout, or the start of this bull breakout down here, maybe the trend line. I do think there are buyers below, but probably at a distance below. And then as far as above today, this again looks like a trading range. We rallied, pulled back, rallied again, we're pulling back. If we do go above today's high, there's probably sellers above. And then for the 5-minute today, coming into the day, let me just draw yesterday's high. Here's bar 1. Coming into the day, we're in a very tight trading range. Then we have a trading range bar for bar 1. It's a bull bar, but it's basically a doji. Trading range bar, so probably buyers below, sellers above. Because of this tight trading range, sellers may not come in directly above the bar. They'd be selling in the middle of the tight trading range. They might instead sell at some distance above, maybe above yesterday's high. Bar 2, it's a bull reversal bar closing on its high. Strong bull bar, but bad context. Lots of overlap with bar 1 and all the bars to the left. Bar 2 is only breaking out of a couple of bars, but again, you look to the left, it's not breaking out of the trading range. So not really a great bar to look to buy, or at least not yet. Then 3, we have a bull breakout. Bull bar closing on its high. It's good for the bulls, but the bulls want follow through. This is the first real breakout bar. Breaking out above a lot of bars to the left, above yesterday's high. And I think I mentioned this at the end of my last video. I didn't mention it today, but over here on the daily chart, we have a bull reversal bar yesterday, but not a very good buy setup. It triggered the buy above the doji last Friday, but the odds were there'd be sellers above. And then the Monday's bar looks decent for the bulls, but there's probably sellers above. When you crack open the bar, you know that the day was a trading range day. So I do think sellers above yesterday's high today. So it might be a problem for the bulls trying to get a breakout. But so far, looks okay. Good bull bar, little overlap between bars 2 and 3, but the bulls want follow through. And then 4, they get follow through. I mentioned this overlap. I want to touch on it one more time. If you look at a smaller time frame chart, On bar 1, the market sold off into the close and then sold off down to the low of bar 2. That was enough of a move that there'd be sellers above bar 1, and the sellers above bar 1 got trapped by bar 2 and 3. That makes the high of bar 1 support. Bears who sold the high of bar 1, they got trapped. Any retest, they're going to look to buy back shorts. Bulls who missed this breakout, doubting it down here, saying we're in a tight trading range. Well, this has become strong enough for a second leg. So you will have traders buying below bar 4, buying this breakout point, the bar 1 high, and buying the moving average. But for now, bar 4 looks like a high one with a lot of overlap with the prior bar. The bulls have a breakout and follow through, and that's good, but the context is not good to buy the close because of the overlap and the fact that it's a tight trading range. Some traders will view it as an expanding triangle, maybe 2 or 3 legs down. 1, 2, 3. I'll draw that. And then a couple of pushes up. Bulls trying to get a breakout. But again, they need to get far above this bull channel line and far above yesterday's high. And then we went outside down on 5. And you can see where 5, the low of bar 5 tested. It went 1 tick below the high of bar 1, and then it started to pull back. So because bar 5 is an outside bar, it reduces the probability for the bears. The context is also bad for a couple of reasons. The bulls just had a strong enough rally for a second leg. There's probably buyers on a pullback for the reasons I mentioned earlier. Plus, it's an outside bar. So we broke out above 4, broke out below 4. Breakouts are failing. We're probably going to fail, reverse back up, and get a second leg for the bulls. Outside bars are expanding triangles. So selling at the bottom of a trading range, usually not ideal. So 5 might be a buy the close bear bar. It's also the first bear bar of the day. And then 6, traded about the close. 6 is an inside bar. There's probably buyers below. There might be sellers above, but maybe at a distance. Bears probably won't sell until at least above bar 5. 7 overlapped the prior bars by a lot, so there's a lot of overlap the past 4 or 5 bars. 7, not really breaking out of anything, broke out above the prior bar's high, but not out of this tight trading range. The bulls might be getting leg 1, pull back, a second leg, but the upside might be limited. Look at all the trading range price action. When the market's in a trading range, most breakouts fail. And we're in a very tight trading range here. Bar 8, we went a little bit higher. The bulls have 2 legs up. Bulls who bought down here probably look to take profits. And let's just see. A common measured move target, especially in trading ranges, is a leg 1 equals leg 2. There's probably resistance at this line. Leg 1, pull back, leg 2. This is the first bar breaking out of all the bars to the left, so this bar needs follow through. Because of that, because it's a second leg, lots of trading range price action, and the bulls need one more bar, the bears will sell that bar, and bulls will take profits. And then that's what we got on bar 9. Not necessarily strong bears selling, but you have bulls taking profits, bears might sell taking a chance. But now 9 has become a pretty decent signal bar for the bears. It's a high 1, but 2 legs up. And if it triggers, if the buy above 9 triggers, you'll have at least a truncated wedge. If it goes above bar 8, we'll have a wedge. 1, 2, 3. Bad signal bar, bear body for the bulls. So again, sellers above. And then you have the measured move target just above as well. So this is resistance area. Inside bar on 10, Not great for the bulls, reduces the probability. 3 sideways bars, inside bars are contracting triangles, probably sellers above. Then bar 11 went to a new high and may have completed a wedge. We have 3 pushes up, 1, 2, 3. Lots of trading range behavior here. And when you think about what a trading range is, the market's goal is to create confusion and to be in a trading range, to be at a fair price where the market's going sideways, because you want the maximum number of traders, buyers and sellers participating. And the reason I'm mentioning that is because here the market was in balance. Let me just draw so we can see what I'm talking about. We'll use the blue line, yesterday's high, and then maybe something like this. So between these blue lines, it's a tight trading range with lots of overlapping bars. This looks like a fair price. If the market tries to break out of the fair price, most attempts to break out fail. It will probably come back into this blue range. You have to judge the strength of breakouts. Does this look like a strong bull breakout? 3 consecutive buy climaxes? Probably not. It looks like a wedge and maybe an opening reversal. It's only bar 11. The bulls had a couple chances to break out, and it looks like they are failing. And again, fair price is below. Plus, bar 1 is currently the low of the day, and bar 1 remains the low of the day about 20% of the time. If you do that study, I remember the last time I did that study, I just quickly went through, maybe the past 100 days at the time, and I just tallied down, was bar 1 the high or the low of the day? And in that study that I did, 18 out of 100 days remained where bar 1 remained the high or the low of the day. So that's 18%. So it's uncommon for, in this case, bar 1 to remain the low of the day, especially with this context. Lots of trading range price action, probably not a trend from the open. 12, we triggered the low 2. Actually, you can call it a low 3, low 1 below bar 4, low 2 below 8, and then low 3 below 11. And that's a decent signal bar, micro double top, wedge top, small signal bar. You might want to use a measured move at some distance above 11, but it's reasonable to sell below 11. 12 is a bad entry bar, but it's not a good bar for the bulls either. Bulls probably don't want to buy above 12. So if we get above 12, there's probably sellers above, but the sellers may just sell the close of 12. Bears might sell to get short. Bulls, disappointed with what they're getting, might just give up on 13. 14 going a little more sideways. The market's deciding, but the equation is getting bad for the bulls. On the higher time frame, we have a bull breakout. This wedge would all just be one rally for the bulls. However, stop below the breakout. If you're buying here, you're going for a 1-to-1 up here. Is it 60% that we're going up here before back down here? Probably not. The momentum is really going away for the bulls. We're going mostly sideways. This looks like a wedge and a failed breakout of a tight trading range. So at some point, you're expecting the bulls to give up, look to buy lower. 14, that might have been a little bit of a give-up bar. Bulls, they're giving up on the trade, looking to buy lower. Bears know that, they're getting short. Broke out below the moving average, did not close below, could have been better for the bears. Now we've had 4 bars without a bull body, and that's good for the bears. Micro channel, probably sellers above, and probably going a little bit lower. 15 was an inside bar, and you can call it a low 1, bear breakout, pullback, and continuing, it's a bear bar closing on its low. And it's fairly high in the trading range. I apologize for the pausing. Again, I'm still not in my home office, and the setup's a little weird for me, so these reviews are a little bit different. But anyway, low one below 15. There's probably more sellers below. Bulls would rather buy lower in the range, and this was a strong enough breakout for at least a second leg a little bit lower. Then 16 sold off, pretty close to the bottom of the trading range. You can call it all one leg. It's a simple leg. There have been no pullbacks, so we have a micro channel since bar 11 to 16. But 16 is a little climactic. It's the biggest bear bar in the entire breakout, and it's to the bottom of the range. I still think we're going to below bar 1, but I think it's reasonable to take profits on the close of 16 because it's climactic and in the bottom of the range. 17, we did go a little bit lower. We tested the low of the day and did not quite get below there. So again, I still think we're going to below bar 1. Tight enough down for a second leg. But again, with trading ranges, second legs can be delayed after deep pullbacks. And this reminds me of yesterday's open. Big up, big down. This should get a second leg, but we might get a deep pullback first. This should get a second leg, but we might get a deep pullback first. And we had that yesterday as well. And then we had a bull bar on 18, triggering the buy above 17, which wasn't very good. The context is okay, meaning the location, low in a trading range, but tight enough bear breakout, probably sellers above the first. Reversal, the first reversal, likely to fail. The bulls probably need at least a double bottom. But now 18 is a decent bull bar, bad sell signal bar. There's probably buyers below 18, but they may not come in until below bar 1 because we're so close to that price on bar 18. And then 19, we got follow through for the bulls, and that's a problem for the bears. Consecutive bull bars, fairly strong bars from the bottom of the trading range. We might have a double bottom with 1 and 17. Strong enough rally, any pullback will lead to buyers below. 19 is a low 1 signal bar, but it's a bull bar, consecutive bull bars. The context is bad. And then 20 continuing to the upside even more. 3 consecutive bull bars, but the context still not very good. Because if you look to the left, we're just in a trading range. Big up, big down, and big up again. And what happened the last time we were here? Trader sold. And I suspect the upside is limited, and if we get to a new high of the day, there will be sellers waiting, but strong enough for the bulls for a second leg up. 21 continuing even higher. Now 21 is the biggest bull bar, or at least looks like it. It's bigger than the past 2 bars, and that's a little climactic. Biggest bar was 18, some smaller bars, and then a bigger bar, 21, racing to the top of the range. And that's a classic bull trap. I used to get trapped on bars like 21 all the time, and I just wouldn't understand what the market was doing. I would see 3, 4 consecutive bull bars. They're really strong, and I would bet the market's going for a measured move. Al says you get a breakout that's strong, 60% chance we go up here before down here. The problem is the context, and this could easily be a vacuum test of resistance. Strong bull breakout, but even the strongest breakouts in trading ranges fail and they reverse. So as strong as this looks, and as much as the bears probably need at least a double top to reverse it, the upside's still probably limited because big up, big down, trading range, this bull breakout is still within the range. If bar 18 was up here and we had 4 consecutive bars way up here, that's completely different. But here, this looks like a vacuum test of resistance. 22, more follow through, but now it's the first bar breaking out closing above the bars to the left, but it's a lot smaller than the rest of the bull bars before it. Still, probably buyers below for a second leg, but I suspect we'll start getting profit taking and start to go sideways fairly soon. Inside bar 23, high 1 but bad context, top of a trading range, maybe 2 or 3 big pushes up. Maybe 1, 2, 3, so it's a big wedge. And then the third leg is climactic. Still not a great signal bar for the bears, but 23 is a bad high 1, so sellers above, and there might be buyers below for a quick second leg. 24, we fell below the prior bars, found buyers below, but 24 is a bad high 1, trading range signal bar, top of a trading range, and there's probably sellers above. 25 triggered the high 1, bull bar closing on its high, but still not breaking out. We're just in this tight trading range here, which is at the top of an overall trading range or wedge. So we might have strong enough breakout for a second leg. The second leg could be very brief. So I still think sellers above 25, but they may not come in until above 22. And then outside down 26. So sellers above here. We went outside down, and now we have a second reversal for the bears. We rallied, fell below 23, rallied again, fell below 25. Again, not a great stop order, but the context supports the sell. Also, look at the moving average. Strong bull bars were above the moving average, but just look back. We're above, we're below, above, below, above, below, above. We're probably going to go back below the moving average. Again, bad stop order signal bar below 26, but also a bad stop order for the bulls. So decent limit order short above if we get there. 27 remained an inside bar, and now we have a stop order sell below 27. Even though it's an inside bar, context supports it, and traders would probably rather sell below 27 than buy, even though it's an inside bar following a pretty strong rally. But again, we're high in a trading range, and in that context, traders are looking to buy low and sell high. Bull reversal bar 28. Bulls see a high 2, bull flag. We have a bull rally, pull back, high 1, pull back, high 2, bull bar closing on its high. That's great, except the context is still bad. This is just a tight trading range. The range expanded, so tight trading range, range expansion, more broad trading range, but we're still high in a trading range. The bulls have to do more to convince traders that this breakout is succeeding and we're going higher in a bull trend. So we need a strong entry bar for the bulls on 29. But the odds are high 2, top of a trading range, probably sellers above. And then 29 didn't even get above 28 before it went lower. So we have a micro channel from bar 26 to 29. Sellers above 29, bad stop order. Bulls want to argue, 1, 2, 3 pushes down, wedge bull flag to the moving average, but the reality is the market's in a trading range. Inside bar 30, trading range bar, sellers above, maybe buyers below, but if they are, they're scalping because if you're buying up here, you're buying fairly high in this overall trading range. We fell below 30 and there were buyers below, maybe for a scalp, but if you bought below 30 and 31 is your entry bar, you might have made 2 points, but you were hoping for maybe a big bull outside bar on 31. So bulls, they'll probably be disappointed, exit above 31 or even on the close. Bears, they still see this micro channel forming, sort of an endless pullback, the rally, and then just more and more bars getting added to this pullback. The bulls are hoping for a second leg, 1, 2, but the context doesn't support it. More likely the market will continue to go sideways, and right now we're high in the range, so we'll probably go lower. Outside down, 32, but trading range bar. And the past 3 bars have been trading range bars. Probably sellers above the bar. There might be buyers, but the same problem. We're fairly high in the range. The buyers are probably waiting to come in lower, like below this breakout. Maybe a 50% pullback of this breakout, but probably not here. Inside bar 33, but now we have an IOI pattern. Inside, outside, inside. That's breakout mode. 35 being a strong bull bar. Looks good, but the context is bad for the bulls. Probably more sellers above, and this might be an endless pullback. Maybe we get a brief second leg and then reverse down. 34 did not trigger the buy above 33. Now 34 is a bad stop order signal bar for the bulls. Sellers above, maybe buyers below, but a little dangerous, endless pullback high in the trading range. And then finally, we got the give up bar 35. And that's bulls. I apologize for the background noise here. 35 was a bear breakout of a bull flag, which is a surprise, and surprises get second legs. Bull breakout, bull flag, and this pullback, and then the bear breakout of the bull flag. Strong enough for a second leg, and probably going to test the bottom of the range. I still think bar 1 will not remain the low of the day. 36 went a little lower, but pulled back, but 36 is bears taking profits. Bulls probably not looking to buy above 36 after the strong breakout, with room to the downside in the trading range. Bulls probably not coming in until at least below 18, if not below bar 1. Sellers above 36. Inside bar 37, sellers above, maybe buyers below, but again the bulls probably waiting to buy a little bit lower. $38 went outside down. It's a variation of an outside bar where the highs are at the same price and the low breaks out. Becoming more two-sided, the past 3 bars going sideways, but still, this looks like a pullback after a bear breakout. We'll probably get a second leg down. 39 going more sideways, but not a very good stop order for the bulls. The bar closed below its midpoint. The buying pressure isn't very strong. The bears are still expecting a second leg to the downside. And the strong bulls are probably buying below strong bull breakouts like this, so they're coming in below 18. Triggered the buy above 39 on 40, but immediately pulled back. Not a very good stop order. Above, traders sold. But now 40 is a bad stop order short. Context is okay because you're expecting that second leg, but now you're low in a trading range and you have a bad signal bar and 2 consecutive bull closes. So there might be buyers below 40. My one concern with buying below 40 is that we're going to fall lower before the buyers come in. And then 41, they did buy below 40. But 41 reminds me of bar 31. Buyers below, but a disappointing entry bar. The bulls, if they're lucky, made 2, maybe 2.5 points if they bought at a distance below bar 40. So this isn't the greatest signal bar or entry bar for the bulls, probably sellers above. And then they sold on the close, 42, went down and tested the low of bar 1, and we'll probably get below bar 1, so probably going at least a little bit lower. Now we have a couple legs down. 42, bad signal bar for the bulls, sellers above, but we're getting into the buy zone, so being short here, a little bit dangerous. 43, triggered the buy above 42, which was a bad stop order signal bar. It's a fairly big bar. 7 points after we've been getting 3 or 4 point bars. And it's a bear bar. And the context is good, bottom of the range, but the signal bar is bad. So odds are sellers above. 43 triggered it, but if you bought above 42 and 43 is your entry bar, your entry bar closed below your entry price, and that's disappointing. And then we went a little bit higher above 43, but then reversed back down. Now we have maybe a low 2, low 3, below 43, or 44, and that's bad context because we're low in the trading range. The downside's probably limited. There's probably buyers below this red line, which is the low of bar 1. 45 testing the low of bar 1. Once again, trading range bar, buyers below, maybe sellers above, but just for a scalp, because at this point, if you're selling here, you're fairly low in the trading range. And then an inside bar, 46. Sellers above, buyers below, but selling, again, a little bit risky because of the increased risk of a bull breakout looking to the top of the range. You had bulls buying below the bull flag. Then this should get a second leg, and even though this is a very deep pullback, we still will probably get a second leg to the upside. And bulls who bought below the bull flag got trapped on 35, and if they bought here and scale them lower, they're probably going to make money. Bull bar 47, but closed below its midpoint, so technically it's a bear bar. But now we have a bad signal bar for sellers, probably buyers below, but at this point I still think we'll probably get below bar 1 before we get the reversal back up to the top of the range. And then 48, you can call it a low 1, low 2, but it's a stop order below a trading range bar, low in a trading range, probably buyers below, maybe sellers above, testing the moving average, bear breakout, bars below, but the context is still bad. It's a spike in channel. The market's converting into a tighter trading range at the bottom of an overall more broad trading range. We triggered the sell below 48. Decent entry bar for the bears, but not breaking out of much. Look to the left, just the bottom of a trading range. The bulls looking for maybe a third push down, 36, 42, or 45, and then maybe 50, 51, which would be a wedge, double bottom of a trading range. Inside bar on 50, bad stop order short, buyers below, and maybe sellers above, but just for a scalp, tight trading range. But in this area, bulls are buying, looking for a swing to the upside. Consecutive inside bars, 51, breakout mode, 50% chance the first breakout fails. So we might get for example, a bear breakout below 51, test the low of bar 1, and then reverse up and test the top of the range again. And then 52, bull breakout bar, closing at the moving average. It's okay for the bulls, but they need more follow through. They're not breaking out of this tight trading range yet. And then follow through for the bulls, breakout 52, follow through 53, strong enough for the bulls for a second leg, and buyers below. 54 continuing higher, and now we're getting above the spike in channel that started on 36. So we got a bear spike, pullback, channel. Overall trading range, the bulls are looking for a breakout. But now we're high in this upper trading range. There might be some resistance here on 54. But again, strong enough bull breakout for a second leg and buyers below. 55 continuing higher. We're testing the high of yesterday once again. But I was suspecting that today, breakouts above yesterday's high would fail, and we would close below the high of yesterday, and probably close below the open, which is down here, which is an important price, especially on trading range days, and I'll draw that in green. Strong enough breakout for the bulls for a second leg. However, coming from an II pattern, you had bears selling above, expecting the breakout to fail, overall tight trading range. 51 might become support if we get back to it. 56 continuing to climb higher, but fairly small bars. And these bars are fairly small with tails, so 54 rallied, pulled back, 55 rallied, we pulled back, and 56 rallied again. There might be a micro wedge here, which pulls back to at least a low of 54. 57 starting to pull back, but probably buyers below. This was a micro channel, strong enough for a second leg, but 57 is a bad high 1 signal bar in the middle of a trading range, probably sellers above. Inside bar 58, starting to go more sideways. The bull's likely to get a small second leg at least, but 58 did test the high close, the close of 56, which was 56.17, and the high 56.17 and a quarter. So if you bought the close of 56, disappointed on 57, whether you scaled in, whether you didn't, 58 gave you a chance to exit at your original entry. And now we might be high in a smaller trading range, and probably sellers above these bars. Another inside bar, consecutive inside bars, breakout mode. Same applies with what I said down here. 50% chance the first breakout's in the wrong direction. And it looks like the bulls not getting the momentum they want here. We have 4 or 5 bars sideways. And 60 broke out to the downside. It's possible this entire sell-off was one leg. This was a pullback, and we're getting a second leg down. 60, strong enough for a second leg, even though the close is fairly weak. There's a big tail. Buyers into the close, which you can see tested the open of the day. The market moved a fair distance below. II pattern, buyers below, got trapped. Maybe we get a deep pullback and then go to the downside further. Pause bar 61, testing the moving average, unable to get above, sellers above, and buyers probably not coming in until a little bit lower. 62 vacuumed up to test once again the high of yesterday, but that looks like resistance. Bulls tried to break out here and failed, tried here, eventually failed, tried here, eventually failed, tried here, failed. They're trying again, they'll probably fail. 62 might be the second leg 1, deep pullback, leg 2, or it's a vacuum test of resistance, bear breakout, deep pullback, then a second leg down. 61's an inside bar, reduces the probability for the breakout for the bulls, and then straight back down 63. Low 1 short, bear breakout, pullback, bear bar closing on its low, double top. Bears might sell below 63, bulls might get out below 63 and look to buy lower. Clean up the chart a little. I still have the low of bar 1 drawn because I think we're getting below it. Weak bar for the bears who sold below 63, but the signal bar is good, and the entry bar, as disappointing as it is still bad for the bulls. There's probably sellers above. Going a little bit lower, 65, but still a bad buy signal bar. So probably going to go at least a little bit lower. Still expecting a second leg down after 60. Leg 1, pullback, and then a second leg down. 66, inside bull reversal bar. Bull's hoping for a double bottom with 61, 64, and then we reverse up, leg 1, pullback, leg 2. Reasonable to buy above 66, but low probability. And then another inside bar, 67. So again, consecutive inside bars. The market's in breakout mode. It's deciding which way we're going to go. Probably sellers above, buyers below. But again, probably getting a second leg to the downside. So the buyers may not come in until a little bit lower. We went outside down on 68 trading range bar, bad to buy above. So probably sellers above. And there might be buyers below, but not coming in until lower. $69, we triggered the buy, but there were sellers above. 69 is a weak stop order signal bar, and look how tight this trading range is. This is not ideal for stop order trading. This is limit order market, and most traders just shouldn't be trading at all. The market's not moving very much. It's better to wait for a breakout. 70, we're attempting to break out to the downside. Buyers below the tight trading range, but now a bad stop order for the bulls buying above, so sellers above. And if you bought below 69, you're probably disappointed with 70. And if you bought below the low of the tight trading range, over here, that's still a disappointing entry bar. So you might have disappointed bulls looking to exit on any rally. 71, we rallied to the top of the tight trading range. Think about 62. The close of 62 becomes resistance. The last time we were there, bulls who bought got trapped on 63, and we stayed below it. Now we're finally testing it again. Bulls who bought will be disappointed, look to exit. So even though 71 is a good-looking bull bar, it's within a tight trading range, and that's what bears sort of look at a bar like 71, and for lack of better words, they lick their chops and they say, market's at a great price in this tight trading range. Bull bar still needs a lot more to convince me we're going a lot higher, similar to 62. They'll probably sell the close. And then 72, bear bar, bad for the bulls, probably sellers below and sellers above. 71 might have been strong enough for a second leg, but it could be very minor. And then 73 continuing to fall lower, further trapping the bulls, and 73 is a bad stop order trade for the bulls, sellers above. Buyers below in the tight trading range, still expecting a second leg down, so the buyers may not come in until a little bit lower. Now we have 3 consecutive bear bars, 72 to 74. It's a micro channel and strong enough for a second leg down, so sellers above, probably going a little bit lower. 75, bear breakout, a little bit of a give up bar from the bulls. But 75 is not the greatest bar for the bears either. It's a big bar, and breaking out to the bottom of an overall trading range, finally broke out below bar 1. And there's probably sellers above, but 75 is not great because it attracts profit taking from the bears who sold earlier. And you can also look at it as a wedge. 54, 60, 75. The most climactic leg is the third leg. So aggressive bulls might look to buy down here, buying below bar 1, betting on a failed bear breakout. And then we go to bull bar 76, which disappoints the bears. 75 didn't even break out. If you look at the close, did not close below the bars to the left. So a fairly weak breakout attempt. Strong enough for a second leg down, but again, you can get a deep pullback first. And 76, inside bar, probably sellers above and buyers below. Then we went outside down, 77. But now 77 is a nested 2 or 3 legs down. Leg 1, leg 2, 1, pullback, 2. 77 has the same problem as 75. It's a good-looking bar, but the context is bad. It's big, it attracts profit taking, it's low in an overall trading range. What are the odds the market just starts to break out here into a strong bear trend, especially in the last 10 bars? Fairly low probability. And then disappointing for the bears on 78. So bear breakout, disappointment, bear breakout, disappointment, consecutive sell climaxes with bad follow-through. Probably going more sideways here. 78, not a very good stop order trade after a big bear bar. Signal bar is not great, sellers into the close, probably going to go more sideways. Then we went outside up, 79. Big bull bar, so big down, big up, big confusion. This is resistance above 77, so sellers above. There might be sellers on the close of 79, but 79, enough of a surprise for our second leg up. And then 80, we reversed back down after testing resistance. Big down, big up, big down. And then 80's in the middle of this tight trading range. So bears who sold up here might take profits, and we might just go more sideways into the close. And then 81 just went a little bit lower, testing the bottom of this tight trading range. Big down, big up, big down. For always in today, I always say on trading range days, I don't think in terms of always in as much. I prefer to think buy low, sell high, and scalp. It's more useful in these days. So, coming into the day, bull breakout, strong enough for a second leg, but is it always in long? It might be, but look to the left, you're trying to break out of a tight trading range. So it might be dangerous to be long here, and here, and here. Strong enough bear breakout for a second leg, but look to the left, bottom of a trading range. You can get a deep pullback, so it looks always in short because of the bars, but the context is probably always in long. Same exact thing applies here. Strong bull rally, but look at the context. You're probably going to get a second leg. However, you're high in a trading range. You can get a deep pullback first. So up here, at some point, becomes always in short, especially when you start getting an endless pullback. And then the give up bar probably flips it to always in short, probably going a little lower. Becomes so two-sided here, probably not worth holding short at the bottom of a trading range. And again, same things I said here. Strong enough breakout for a second leg, but you're within a trading range. So is it always in long? The bars make it look like it's always in long, but you start to hesitate. It might start to become always in short. And then all through here, just a very tight limit order market. For stop order trades today, I thought the first reasonable stop order trade, you could buy above 3 taking a chance, but if you get bar 4, it's a little disappointing for an entry bar. You might just get out and look to buy lower. I thought reasonable to sell below bar 11. It's a low 3 and a weak bull breakout out of a tight trading range. Maybe above bar 19, consecutive bull bars, bottom of a trading range, double bottom. Decent bull bars, you could buy above 19, you could buy above 20. 21, not so good because it's a little climactic and you're at the top of the range. 27 might be a reasonable sell, betting the bulls got their small second leg. We're at the top of a trading range. Now we have a micro double top and then an inside bar. 27, you could sell below it. And then through here, not great stop orders. 59 was reasonable to sell below. II pattern after a bull breakout attempt, but high in this trading range. You're not getting great momentum. This bear breakout stronger than this bull rally. 72, you're expecting resistance here. You're expecting maybe a second leg down. Reasonable sell below 72, 73, 74. That's it for stop orders. For limit order trades today, I thought you could buy below bar 4, strong enough bull breakout for a second leg up. And then you could buy below bar 8, strong enough breakout for a second leg, and a weak sell signal bar for bar 8. Bad stop order means a good limit order. Bar 9 is a high 1, but bad context. 2 legs up, weak signal bar, sellers above. And then down here, can you argue you could sell above 17? Yeah, you can argue it, but you're at the bottom of a trading range. So it's a micro channel, but micro channels reverse without double bottoms all the time. We had that happen yesterday here. Bear micro channel and then reversal. Through here, you could argue weak sell below 23. You could buy below for a scalp, but you're buying high in a trading range. So you're definitely scalping. You're not looking for a big rally. And then through here, 31 is a bad stop order, tight trading range, and overlapping bars. Endless pullback, and the context is bad. If you're buying here, you're buying high in a trading range. You might use a wide stop in case the bulls get a quick second leg, but there's probably sellers above 31. And then strong enough breakout, micro channel, sellers above the first reversal, which was 39. But then 40 is a bad, low 1, low in a trading range, consecutive bull closes, buyers below. And then a low 2, maybe a low 3 below 44, bad context, lots of overlapping bars, buyers below here. And then a weak stop order above 46, tight trading range. Weak signal bar, sellers above 48, similar to 44. You could buy below, betting it's a low 1 at the bottom of a trading range. And then you could sell above 51, betting it's a weak stop order, bottom of a trading range, middle of a trading range maybe, but you would have gotten trapped there. But if you scaled in, you would have avoided a loss and made money. Strong enough bull breakout for a second leg, you could buy below 56, but similar to up here. A little risky, you can buy, but it's a scalp. And then strong enough breakout for a second leg. Not ideal to sell above this inside bar in the middle, but to sell above 60, the breakout bar, was reasonable. Low 1 below 63, but big up, big down, trading range, buyers below 63. All through here, very tight trading range. I don't recommend trading in here. Strong enough breakout for a second leg, sellers above, limit order sell there. And then that was about it. You could buy below 78, betting it's a bad stop order. Consecutive sell climaxes if we get below 78. The downside's probably limited. And then sellers above bar 77, which got triggered on 79. And that was about it. And then where do we go tomorrow? Today was a low 1 signal bar. I mentioned that earlier. There's probably buyers below, but they may not come in directly below the bar. We may test this swing low. We may test this bottom of the breakout for the bulls before the buyers come in. But if we get above today's high, probably sellers above, and I'm expecting more trading range price action. Look at the past 2 days. The market's been very sideways, and I expect it to go more sideways. And as always, please feel free to leave questions for me in the comments and include timestamps for any question specific to this video. Alright, hope everyone has a good rest of their night, and thanks for watching.